Hello and welcome to Wyckoff Training Academy. This video has been recorded for people who are have or who are about to buy this system, which comprises of version 178, 81, 80, 179. So first of all, congratulations to those people who have bought this system. And second thing, for the people who are planning to opt for this system, today is the last day, closing day of getting the system. So basically, I've developed many systems, and out of which I share the most high probabilistic trading system with my students or the traders who are just of who want to opt for a trading system rather than going for training. So this system I have developed in such a way that it increases the probability of winning into a trade. Now, for example, if I say I have an accuracy of 80%, for example, what does this mean? Many people say like 80% means you are the king of the market or you are making the market move according to you. That is not the case, my friend. 80% here means if I'm trading 10 times, my sole objective is to win a trade. Like out of 10 trades, I should be in a profit for 8 trades. So now, this is one way of quantifying how like accuracy is, or as far as accuracy is concerned. So another way which I like to prefer is to, if I am getting into a trade, either if I am expecting price to go upwards or price to go downwards. Like for example, if I'm opening an buy order over here, or I'm opening a sell order over here. So I want to see, like I like to see, and I want market to go in my favor. That would be my analysis based on whatever tools I have developed to go in my favor 80% or more than 80% of the time. So please keep this thing in mind. This is not something wherein I am trying to say that 80% means 80% because various people have different measuring tools to like to come to a conclusion what accuracy is. Accuracy is something which I quantify in two terms. One thing, uh, like I would like to see 8 trades in a should be winning trades, and 2 trades should be my losing trades. So this is the first calculation. Second calculation, which I like to see, which I prefer more, or which I value above all, is whenever I'm opening a sell order uh, in expectation that prices are going to go down, 80% of the time market should go in my favor. And as if you people are following my videos and my post in different groups and different forums, or in my personal trading Telegram channel. So you might be seeing that I normally doesn't like to give the stat in the way normally other people do. I give a stat in a way wherein a normal trader, what he is expecting, he is expecting his at the end of the month or end of the week or end of the day, he should be in a winning situation, and market should go in his favor based on his analysis or her analysis. So that analysis should be based on different probabilistic tools. So here we are going to discuss about the probability because trading as usual is a game of probability. The more probability you have in your favor, the more you have chances of winning a trade or price going into your direction. This is a simple math which everyone should understand by now. Or many people they don't get into this thing. They quantify things in another way. They return on investment is calculated based on different things. So I'll not get into that thing. That thing is different part. So this small video is purely dedicated to making you understand how these tools has to be traded and how much profit they have, how much profit you can make out of this thing based on this two criteria, or two quantifiable things. One thing, whether market went into my favor or whether I got 8 out of the 10 trades in that to be a winning trade. Because first thing first, I like to trade when my stop loss is less, and when it comes to profit, I sit with predetermined profit or predefined profit, or I would call it as PD. On the second thing, if I'm correct, if market is in my favor, then I don't bother about profit, because let the market take care of my profits. So on those line, I have what I did. For the people who have bought the system, I just made a video making this what you can say, a statical calculation based on beginning date of 23rd October and ending date of 6th November. Those who have bought the system, they can check it at their end. You can go prior to October. You can do uh, do the evaluation based on what type of trade setup you got. My trade setups are very simple, because money is always made when things are clearer to everyone. It is not like something which is secret to me and I am the only person who has the secret monopoly or secret formula to make money. If if setup is visible to everyone, you will make money, because you are following the liquidity and momentum either ways. So having said that, in this 23rd till 6th November, I got 12 trades, and profit in points is something which I am relating to this one, not this part, or I'm not considering the percentage. So either ways, you can do the calculation, do the math of what profit points you would calculate based on your broker. So on TradingView, I calculated it around like 20,000, 41.7. So this is what the profit is. So now let's dive into what this trade setup would look like. This is the first trade setup, going from the first to backwards to 12th trade setup. Now, first thing first, here you can see the the big trade and the what do you say, Wyckoff volume indicator version 80, and imbalance is something wherein it is behind, and this big trade, version 178 and version 180, is giving us an indication that price is going to go downwards over here. But prior to that, this is the wonderful basic tool which I have developed over the period of time, and all the things are based on Wyckoff, and all the things are based on price and volume. By Wyckoff, I mean I'm only using demand and supply principle in my studies and in my indicators, wherein I try to assess whether which side has the greater power to pull either upwards or either downwards. This is as simple as it can. So here, by the close of this or by the opening of this, I enter into a trade, or I consider it to a trade. But my trade timing is suggesting that the market is bearish, and I'm trading based on this pullback. So this is how it has developed, though it has showed me that prices are going to go downward from this particular point. But this was the first initiation wherein I got a clear-cut picture that this is going to go downwards. And I have applied only in this 180 version. I have 181 version or 170 version. I have applied 180 version. I have applied high volume pullback. So now I'm about to, once I'm done with today's allocation of indicators, I'll dive into greater detail what this uh, high volume, low volume pullback uh, has to offer to us. So this was the first trade. Now going backwards, this for the second trade. Now here you can see market is bullish. I got this opportunity at this particular point, and uh, to be precise, when the red line is below the zero line, we only look for bearish trade. We expect price to go down. When this green line is above this gray line, that is the zero line, we only look for price to be go into get into bullish trade. So here I got an opportunity. I made why I exited over here, why I have mentioned this particular point. That is something which is post purchase you would be able to. I'll explain to you why I uh, exit over here. Because as I mentioned, I sit with predefined profit, and here was a like to say this was the exhaustion point based on my analysis. So I exited at this particular point, that is 0.30%. So here I got an entry. I got a short selling opportunity. Look at this particular point. It is below zero line. I got an entry over here, and I just jump into a trade over here, waiting for an opportunity for price to go downwards. Remember, whenever this line or this particular what you can say, you can call it as moving average line or anything as per you. Uh, it is below zero. It is going to give us a short selling trade, and here also I got an opportunity at this particular point wherein this was a price pattern which happened, like this was the uh, correlation, because my big trade, this is a big trade indicator. It is suggesting we are selling, we are into selling, and there is no heavy volume pullback at this particular point. So lower prices are expected, and so does it happened, and it market went downwards and prices went downwards. So here also in this particular pattern, you can see the red line was below zero line, and I was waiting for an opportunity to get a perfect entry. I got an entry over here, and my big trade was showing me selling since this particular point. And over here, I don't haven't got any kind of high volume pullback. So it is expected. I was expecting price to go freely downwards based on demand and supply principle of Wyckoff. Here also I got one entry, but here I got a high volume pullback. As I mentioned, I applied high volume pullback to this particular thing. So high volume pullback and low volume pullback, I'll get into that thing. I'll make separate videos for that for use this thing. This is not like as I mentioned earlier. This is just for graphical representation. You can consider I consider it as a moving average or a ribbon or whatever you want to call it. The main objective of I have a simple objective. I just want to see whether the pullback is high volume, then what is the result. If the result is in like sometimes high volume means there would be a trend change. Sometimes high volume means there would be a pause, temporary pause. Sometimes high volume means there is hidden buying as per Wyckoff principle. So we have to identify in context. So big trade is selling me buy, big trade is selling me buy. As soon as it turns here, as soon as it crosses this line, this is a very valid entry for me. And again, I got an entry at this particular point, because why I got an entry, though we can see there is a difference between this line and this line, is that after a pullback, if I'm getting this kind of result, that means I'm this either this is a hidden buying, or either there is something wherein prices are going to go upwards. So this is simple as that. And after that, I got an entry over here, and as you can see, simple and straightforward. If I draw a line from this particular point, you can see this is the high volume pullback. That's the reason I no, this is not unfolded. What made me to book my profit is something wherein which was quite visible for me prior to that. Now here also I got an opportunity, small trades, but whenever I don't mind taking small trades or big trades. It's simple. If you move on to if you go to a higher time frame, you'll get bigger trades. But my sole objective is to just to get the trades and increase. Whenever I'm getting into trade, I want 80% of the time my trades to go in my favor. Though it can increases or it will increase over the period of time. Here also we got big trade in our favor, big trade in our favor. We got price coming upwards, and here this is a impulsive trade which I have taken, because the reason is whenever I see this kind of situation, either ways it is something wherein you can say uh, there is no low high volume pullback. So I have taken into consideration the green color and the this particular momentum line crossing above price volume momentum line crossing above zero line. So this was a trade wherein I made like 11327.4 points. You can do the math. What calculation do you based on your this thing? Here you can see everything is bearish. Here it is bearish. It is big trade is bearish. There is no whatsoever high volume pullback. So that means we are about to see lower prices in coming session. By session I mean this is a 15-minute chart. So one candle comprises of 15 minutes. So 15 minutes session come to come. So this is how I've made this 12 trades. I would once the people who have bought it, I'll make separate video for every indicator, and I'll give you the detail uh, overview of how this imbalance. This imbalance is something very, very, very unique because if sometimes if it acts as a like it gives you a price area or price level wherein market has high probability of revolving or rotating or switching the trend from. So hope you people might have enjoyed this video and please do the calculation if I have of this particular point. So if we find anything plus trades into it, but I have tried to make things or make the trades as per my wherein the criteria is fulfilled. Or sometimes I have also chosen some certain trades, like for example, wherein for example over here I have chosen this particular trade wherein we are not getting anything which is acting as a pullback, but rather it is showing me that on this context, if it is a high volume pullback and if I'm getting this thing, so I want to be in this trade because my stop loss would be underneath. So I don't want to trade with bigger stop loss. I always try to focus on minimizing my loss and let the market take care of my profits because I know if I'm right, I would definitely get profit and I can play the number game in quantity. So hope this video would have added some information into this particular system, like Vice Wave and effort versus result and trading tool on tape rate. You can go in sync with this thing because as I to end with, I would like to say if I want to go with an 80% probability of winning the trade, so I want to see the market in 10 or 8 or 5 different in different views so that when all the views come into sync I have my probability would definitely go to 80%. If I'm going with one object, one view, and second view is not in sync, then automatically my probability would decrease. So this is the sole objective of applying all the observing market with different point of views. And when all the views matches and all the probability come into sync, you get a high winning probability trade and market goes in your favor. That and at the end of the day, you make profit. So I hope you my people might have enjoyed this video. If you have any doubt, you can drop me a message in or you can comment below this video. And looking forward to seeing you on other video. Thanks a lot for watching this video.